Banking Circle provides banking services to FinTech businesses. So typically our clients are PSPs, merchant acquirers, any sort of regulated payments company. They're the kind of companies that we provide services to. Many of these businesses provide services to SMEs. So we provide products, services to regulated businesses who will in turn provide those services to SMEs, one of which is the Banking Circle lending solution. So Banking Circle provides a lending solution for our regulated businesses. This is a full end-to-end solution. The front end, the technology, the capital, all of which a PSP or an acquirer can then provide a loan to the underlying merchant. This could be either a loan or an instant settlement. So for example, an SME, they're renovating their restaurant, they need to have a loan. Well, you can now, through Banking Circle lending, get a loan. Or an SME is waiting 1, 2, 3, 4 days to receive funds from their acquirer. At the click of a button, they're able to then receive those funds instantly. SMEs represent, I think, 99% of UK businesses, and they employ 2/3 of the UK workforce. So they're critical. And I think post 2008, the economic crash, many of the banks are just not giving SMEs the services that they would ordinarily need in order to function as a business and also to compete with some of their larger counterparts. We're seeing this is pretty evident in some of the white papers we published as well, how underserved SMEs are. So Banking Circle lending is just one solution that we're providing SMEs today. We're also helping SMEs by servicing the FinTechs that are providing services to the SMEs. So for example, FinTechs need to settle funds to an SME. Well, through our solutions, our banking solutions, they can send funds to SMEs quicker, faster, cheaper and more efficiently than using a traditional bank. Many of the SMEs have now multi-currency requirements, so foreign exchange, for example. Again, this is a service through the FinTech that we're able to provide, which ordinarily, if they went to a bank, would be quite difficult to access. And then of course there's our Banking Circle lending solution as well. So we very much sit in the middle of this ecosystem between the FinTechs and the SMEs. Accessing capital is one of the biggest challenges for an SME. Accessing capital quickly and efficiently is one of the most difficult areas for an SME. Now, if they don't have it, they can't grow their business, they can't hire people, and many businesses will close down if they can't access that capital. So it's absolutely key. And for all the conversations and research that we've done with all the SMEs, that seems to be their biggest pain point. Banks are simply not lending enough. When we look at the innovation that's happening in the space, banks are beginning to take the form of utilities. So they will provide the piping that you need in order to send funds globally, for example. But the front end, the API technology, the innovation, that's very much where FinTechs are sitting today. And what I'm seeing happening in the market is the FinTechs are providing the servicing directly to the merchants, the SMEs, because they'll drive the innovation, with the banks very much taking the view that they will do all the piping that's needed in the background to get the funds across the global clearing system. So we're seeing this change in the marketplace beginning to evolve, and that's accelerating with FinTechs coming in and banks beginning to take this space more as a pipe that's sitting behind all of these FinTech providers. I mean, we're seeing it with the closing down of branches. So, you know, this is becoming quite, I mean, it's just in my own high street in Stoke Newington. There were 3 branches over there, they've all gone now. So where do you go as an SME? A lot of the SMEs, they relied on going to a branch to access core banking products. Well, they'll go online, for example. You know, they'll go to their acquirer. And that's where you're beginning to see a change in the way SMEs are behaving in order to get core banking products. But we have a long way to go. I mean, a lot of SMEs still, I think we did a research quite recently where 51% of SMEs would still go to their bank as a first port of call to get a loan. Irrespective of what the rate is, that's the first place they'll go. And we need to change that. We are beginning to see many FinTechs coming in specifically focused on SMEs. Tide, Revolut, Starling, we're beginning to see these providers coming in, and they're providing great onboarding experience. They're providing tailored solutions that's very specific to an SME. And again, with Banking Circle lending as well, the whole process of getting a loan, for example, is slick. It's very quick. It's very fast. The decision making is done, it's near on instant. So the whole process is a lot quicker, and it's a lot less stressful for an SME, which in turn allows the SME to focus on their business as opposed to having to stress about accessing core banking products. The way we've built our business is that we've got FinTechs and banks that's connected into our infrastructure. So in many ways, these financial institutions, they all need to work together. And I think collaboration is going to be quite key in this market. That's come out through a lot of the research that we've done in this space, where FIs and FinTechs have to stop competing with one another and need to start working together, which in turn will provide a better service to the SMEs. SMEs really need this support. I myself come from a SME background. I grew up in a shop, so I know how difficult it is firsthand for an SME just to get a loan. I mean, our shop, we'd had the refrigerator system break down, and you have to immediately spend £15,000 to get a new fridge unit. That can take quite a long time if you go through a bank. So through the research we've done, we've spoken to many SMEs. One of the sectors, for example, are gyms. So you've got Christmas, everyone's enjoying Christmas, the New Year's resolutions come in, and everyone's hit the gym. So the gyms are normally very busy in this first quarter of the year, and then they die down, and then everyone goes back in again to get back into shape over the summer. Well, there's seasonal activity there. And how do you lend against that? Now, if you go to a bank, they'll just give you a loan, and you have a fixed payment that you have to make every month, which doesn't fit in with their business. Now, if you can build an innovative way of lending, which is tied in to the cycles of a business, well, that's exactly what an SME needs, and that's exactly what the Banking Circle lending solution does. Many of these SMEs, for example, with Banking Circle lending, we look at their historical card data, which we will get from the acquirers and the FIs. They will help us understand how is the SME performing, how is their business performing. It's not a case of just looking at their P&L and their balance sheet and try to decipher, but it's actually to look at the business performance over the past 6, 8, 12 months, so we can see the seasons, the seasonalities and trends of their business. And that allows us to better lend to that particular business, better assess that business as well, which is unique, and it improves considerably the approval ratings for a loan as opposed to going through a standard application process with a bank. We don't discriminate by the size of that SME. That would go against the complete ethos of financial inclusion. You're a business, whatever scale or size you are, and you need a loan. That is what the solution is built for. And we will look at multiple metrics in order to decipher whether we can provide a loan to you or not. Many of which will be geared around trends. So if you are a small business and you've got sufficient card data for us to analyze against, then we will use that in order to assess whether we can give you a loan or not. And that whole criteria is done very quickly. The application is all done online, and for the FinTechs, quite often we brand it in the FinTechs brand, so it looks and feels as if you are working directly with your acquirer. Because many acquirers have relationships directly with SMEs, of course they do, because they're providing card services. So this is just a nice add-on to the services that they're already offering to that SME. So the add-on is completely provided by us, so there's no impact to their IT infrastructure or their IT requirements. We provide the end-to-end solution. But going back specifically to your question around whether it's a small end of an SME or a large end of an SME, that has no impact in our requirements. Financial inclusion is everyone.